Should you buy a home now or wait until 2025? This question's coming up all the time, and I'm going to break down 4 key pieces of data next that will give you the answers you need to make a winning real estate decision, whether it's in the fourth quarter of this year or sometime next year in 2025. If you like what you hear, you get some value out of this, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call to go deeper on these reasons behind waiting versus doing a real estate transaction now, you can schedule a call with our team in the link in the comments. So 4 data points that are going to help you here, because we know data is going to help you understand the market. And the reality is, if the right home comes along and it's a fit for your family and it's in the right location, timing the market can be very tough. So you want to be very in tune with offerings that are coming to the market on a regular basis. So the first data point here is we've seen mortgage purchase applications. The index hit its all-time high this year last week, with the exception of a couple weeks in January and February when we saw rates drop below 6%. So we're seeing the purchase index, the mortgage purchase application index. What that means, it's a number that's developed to show how many applications are coming in. We're seeing more people lock in and purchase homes right now, which tells you demand is mounting. There's probably a couple reasons behind that. One is the recent drop in rates. A couple weeks ago, we hit the lowest level since February of 2023. We've seen the Fed cut 50 basis points from the federal funds rate. That's brought some optimism to the market. Took a little time, and now we're starting to see it happen. So we have these things going on that are causing more people to come back to the market, which means that there could be more competition for you as rates drop and as inventory grows. So you think if rates go below 6, there's going to be a whole lot more people interested than if they are slightly above 6. So that's one thing to consider, whether you're looking at waiting or making a real estate decision now, provided you find the right property. So that would be point number 1. Point number 2, we saw showings increase in the bright MLS greater Philadelphia area, 4.8% compared to this time last year. And that was through the end of last week. So this is very recent data. So there's more showings that are happening compared to the same week, the same time of year, this time last year. So there's more buyers coming to the market. We're seeing demand pick up in tour requests and in showings. So you've got purchase applications increasing, you got showings increasing, and we've also seen point number 3, declining mortgage rates. So right now we've seen people lock in just below 6 with some pretty incredible scenarios around debt to income ratio, how much money they're making, all those things. And obviously that's it's going to be a very individual scenario, what you can lock in your rate based on credit, income, debt to income ratio, the property itself, how much money you're putting down, how much cash you have in the bank. There's a lot of factors, right? So knowing that's the case and knowing that we're going to see declining rates, I'm going to have Nick put up a slide here that shows where the predictions are later this year and throughout next year in 2025. And there's predictions anywhere from 5.5 to 5.75% by the end of next year. So as rates decline, more buyers will be coming back to the market. So these are predictions from the Mortgage Bankers Association and Fannie Mae. These are people that do this for a living, so you can see where the experts are projecting rates will come in. And the fourth data point to look at is that inventory's up 22.9% year over year. So there's more options out there than there were this time last year. So there's more choices. So when you look at these data points, if you're considering whether I should wait to buy or whether I shouldn't, there's a couple things to consider. If you're selling and buying at the same time, like a lot of people are, I'd be looking at inventory creeping up, and if there's more competition, you might not get as much money for your house. So as inventory rises, there's going to be more competition for active listings that could lead you to not get as nice of an offer as you could get right now. The positive with that is that there's more options for buyers, so you have more homes to choose from. So that's a reason to maybe get back into the market a little sooner, or at least strategize about what you want, so you're seeing those homes come to the market in real time, and a great real estate agent can do that for you. Seeing rates decline, like I said, when rates drop, there's going to be more people that are interested. That's very clear. So you can always renegotiate the rate with a refinance if rates drop. What you can't renegotiate is the price. So if you're locking in a price now, knowing that prices are slated to go up again next year, and they're up between 7 and 8% year over year in the greater Philadelphia area, you can lock in a lower price, and rates may not come down as much as you think. You might be dealing with the same rate this time next year. That's always a risk there, and it's very tough to time these things. Never works out for people when they try to time it. The fact that you can get a lower price now versus next year, that may be a benefit to you when it comes to buying. And seeing that showings are increasing and mortgage purchase applications are up tells you there is more competition coming back to the market from a buyer perspective that could lead you to have to get more aggressive with your bid. So there's a lot of things to unpack here, all the more reason to get clear on what you're looking for, have a strategy meeting with an agent, and have someone working on your behalf to navigate this sort of market. So this data should help you make that decision. If you want to go deeper, schedule a call with our team with the link in the comments.